We're joined today by Magnus Prim. He is Chief Asia Strategist at Swedish bank SEB in Singapore. Magnus, welcome to the show. Thanks for taking time. You heard the report earlier, Premier Yuan making an unusual appeal to foreign CEOs yesterday in China, asking them to help them avoid a currency war. Do you think China and the U.S. are headed for this currency war that some have predicted?
I mean, definitely you are seeing the tension rise quite significantly now ahead of the semi-annual report that is due in the U.S. on April 15th. The key issue is, of course, if the U.S. will opt to label China currency manipulator, because that would imply, of course, a whole range of actions against Chinese exports, and that in turn would trigger retaliatory actions from China. So that's the main issue right now. I don't really believe that the U.S. will take that step, but leading up and until we see that report on April 15th, there will definitely be a lot of tensions and a lot of harsh words going back and forth between China and the U.S.
Magnus, even if the U.S. doesn't label China a currency manipulator, do you see the Treasury Department taking other steps, perhaps to at least sidestep that issue, but still target China for the value of its currency?
Well, I mean, I think that we are seeing increasing pressure on China to do something, not just from the U.S. You're seeing from a range of countries and institutions. You've seen IMF calling for it. You've seen an ADB call for it, more or less. So basically, you are seeing a ratcheted up pressure now for China to do something. Now, this unfortunately might turn out to be counterproductive, because China in a situation like this tend to lean the other way and maybe even postpone a move on the currency so as not to be seen to fold for foreign pressure on this issue. I think that Chinese authorities are planning to do something on the currency. It's just not going to happen when all this official discussion is going on. And I think that China would prefer to keep these discussions more low-key and off the headlines, so to say.
Of course, China maintains the yuan is not undervalued. What's your official view? Do you think it's come more into line, or it remains undervalued from your view?
I mean, it definitely remains undervalued. I think there is very weak arguments to say the opposite. Having said that, I think that we will see that Chinese authorities are well aware of this fact. It's just that they can't admit it right now, because then obviously they don't have an argument not to move on the currency immediately. So I think there is an awareness that they need to move on the currency, and it's not just in terms of having an undervalued currency. It's also for domestic reasons they should move, so that they get an incentive structure that actually promotes imports rather than exports.
So the consensus is they should move. I guess the question now is how much and when are they going to do it? Do you think it's going to be incremental, or are we going to see a one-off dramatic revaluation here, Magnus?
I think definitely we're talking about an incremental move. We have it slotted for the end of the second quarter. It doesn't make sense for them to make a one-off move. They are already concerned as it is about how exporters will be able to deal with a stronger currency. And what they've been pushing for all along has been increased flexibility of the yuan. So it wouldn't make sense just to make a one-off revaluation and then peg it again. You don't get the increased flexibility of the currency, but you would hit the exporters quite significantly. So that would definitely speak in favor of an incremental move rather than anything else.